Elsewhere in the headlines, global commodity markets have been shaken up coming off the heels of inclement weather in Brazil. This has triggered price spikes over the last several months, and I was joined earlier this week by University of Illinois ag economist Dr. Scott Irwin. We discussed how those numbers are impacting global markets and the potential impacts on domestic markets as we head into harvest.
Well, the biggest impact was in the global feed grain markets because of the late dryness in the last growing season affecting their second crop, safrinha corn yields. And so that's been a major factor in the continuing strength in USDA projections of US corn exports for the current marketing year because we don't have as much competition coming from Brazil.
So, Scott, how are things currently looking in Brazil as they begin planting again?
Well, they had a very dry season, a continuation of the late season last year. It looks like the rains, are coming back. I mean, I think they're starting probably a bit drier than would be normal in lots of areas, but it's too early to say that they're going to have anything other than a normal crop this year in terms of yields. The big story on South America is going to be acreage expansion in response to the high corn and soybean prices, and wheat too.
And of course, the U.S. has had its fair share of flooding and drought this year. How are things looking for corn and soybeans as producers have begun getting into the fields here in the States?
Well, I think it's kind of a mixed bag from what I'm picking up right now. Again, we're in that period where harvest is really across the bulk of the U.S. corn belts really getting rolling. So you have to be careful about what you're hearing from just anecdotal reports. But if I characterize what I'm hearing right now is that maybe the optimism, particularly on corn yields, that we saw just a month or two ago, maybe was slightly overdone. And maybe some of the pessimism in the Western Corn Belt in places like Nebraska was also a bit overdone. So, but on balance, probably keeps us about the same in terms of the US average corn yield is where I'm at right now.
And you mentioned those anecdotal reports. There have been some early murmurings of exceptional crops here in Nebraska with corn and soybeans. What would you consider a bumper crop year, and how would that impact market prices?
Great question. I would define that relative to trend. So there's always among economists a big debate about what the right trend estimate is in any year. I would use something around 178 bushels an acre right now, maybe 177. So it looks to me like we're going to be this year at or maybe slightly to somewhat below trend. So certainly not a bumper crop. So with my trend estimate, you really would need to get a US average corn yield above 180 to begin talking about a bumper crop. And that's not going to happen this year.
Okay, Scott, I'd like to shift gears here a little bit and discuss ethanol production. We had you on the show back in early February to discuss ethanol production and profits in 2020. Have there been any significant gains or losses since the beginning of the year, and what are you keeping an eye on moving forward?
I would say in general, in terms of the physical side of ethanol markets since we last talked, probably not much change. Some probably modestly good news since then in terms of the recovery in US gasoline consumption. And since almost every gallon of gas that we use has at least 10% gasoline in it, that's good for ethanol. So we've seen some what I call modest strength as driving has recovered in the United States since we last talked. The really big development is on the policy side, and that's coming out, really in just the last few days, where it looks like the Biden administration has done a major U-turn and has turned aggressively negative on RFS mandate levels based on a leaked proposal from last week. So that's probably the biggest thing to watch on the ethanol and biofuel side right now.
And Scott, before we let you go, I'd like to give you the opportunity to discuss any marketing or risk management advice you'd like to impart on our viewers.
Well, my message is really simple and hopefully pretty clear. We are currently at historically very high grain prices, and I continue to think that it's prudent to begin marketing 2022 and, where possible, 2023 crops to some degree at these relatively high price levels. I think with the supply response that the prices are going to prompt globally, I'm not looking for a collapse in grain prices, but it's inevitable, if we have normal weather around the world, that we're going to see lower prices than we're seeing right now, looking out the next 12 to 24 months. So I think this is a really good marketing opportunity. That's my advice.